Welcome, everyone. If you're running a business here in the UK, you know that navigating VAT can be, well, a bit of a minefield. That's why Pro Tax Accountant, one of the UK's top accounting firms, has put together this discussion. We're going to help demystify the reverse charge VAT system and make sure your business is totally prepared and compliant.
So, here's our game plan. First, we'll break down what this thing actually is. Then, we'll look at how it works in the real world with a practical case study. After that, we'll dive into the impact on your business, the good and the bad. And we'll wrap up with the key steps to make sure you're doing everything by the book. Sound good? Okay, let's jump in.
All right, first things first, what is reverse charge VAT? To really get a handle on it, it actually helps to understand the problem it was created to solve in the first place. In the simplest terms, it completely flips the normal process on its head. Usually, your supplier charges you VAT, and then they're the one who pays it to HMRC. With the reverse charge, that responsibility shifts. You, the customer, are now in charge of reporting that VAT directly on your own tax return.
So why the big change? Well, the whole system was designed to fight a specific type of crime called missing trader fraud. This is basically where a supplier would charge VAT, pocket the cash, and then, poof, they disappear before ever paying that tax money to HMRC. The reverse charge pretty much makes that impossible. And this is where you can really see the difference in how the money moves. Normally, cash for VAT goes from you to the supplier and then to HMRC. Simple. But with the reverse charge, that flow is just cut. The VAT money never actually leaves your account. You just pay the net amount and handle the tax reporting yourself. It's a fundamental shift. Okay, so that's the theory. But how does this actually work day to day? Let's walk through the practical steps your business needs to take to get this right. Think of this 5-step process as your roadmap. It all starts with clear communication, figuring out who the end user is, and then it flows all the way through to invoicing correctly and doing the right accounting. And pay really close attention to that last point on cash flow, because, as we're about to see, that one is absolutely critical. And here's where the accounting magic happens on your VAT return. As the customer, you'll put the VAT you owe in box 1, but then you reclaim that exact same amount in box 4. What's the result? Well, the two entries completely cancel each other out. So for that specific transaction, the impact on what you actually pay HMRC is 0. It's a paper transaction. Theory is one thing, right? But let's make this really concrete. We're going to walk through a super common scenario from the construction industry just to see how these rules play out in the real world. So we've got 3 main players on the field here. You need to pay close attention to their roles. We have BuildCo, the main contractor. Then there's Retail Corp, they're the final client, or the end user. And finally, we have ElectroServe, a specialist subcontractor that BuildCo hired. It's the relationship between these 3 that decides everything.
Okay, first up, let's look at the main contract between BuildCo and Retail Corp. Because Retail Corp is the final customer, the end user. The reverse charge does not apply here. It's just business as usual. BuildCo invoices them for the work plus VAT, just like any other normal transaction. Simple as that.
But now, look what happens one step down the chain. BuildCo isn't the end user of the electrical work, right? They're passing those services on as part of the bigger project for Retail Corp. And because of that, the reverse charge kicks in. ElectroServe does not charge VAT on its invoice. Instead, BuildCo is the one who accounts for it on its own VAT return. See the difference?
We've covered the why and the how, but let's get to the really big question. What does this actually mean for your business's bank account and your day-to-day operations? This is the so what moment.
The impact really depends on which side of the deal you're on. For the customer, it's great. Your cash flow gets a nice little boost because you're not paying that VAT up front. But for suppliers, especially the smaller subcontractors, it can create a serious cash flow squeeze if they were relying on that VAT money as part of their working capital. Now, while the construction industry is definitely the main event here, making up about 60% of these cases, it is so important to know this isn't just a construction thing. The reverse charge also applies to specific services in tech, telecoms, and even security services. Look, if you remember just one thing from our chat today, let it be this. As a supplier, you absolutely must plan for the cash flow hit of not getting that 20% VAT from your customers. It fundamentally changes how you have to manage your money. So, knowing all this, what are the actual steps you should be taking, like right now, to get your business ready and make sure you're staying on the right side of the rules? This checklist is your path forward. It's all about getting your team up to speed, making sure your systems are ready, and most importantly, talking to your customers and suppliers. Being proactive is everything here. A little bit of prep now is going to save you from some major headaches later on.
And that really leads us to the final critical question you need to ask yourself. Is your business truly ready for this? Because navigating these rules can be tricky, and getting it wrong can be costly. It's a question every single business owner in these sectors has to answer honestly.
Look, if any of this feels a bit overwhelming, you don't have to go it alone. For expert guidance and just complete peace of mind, you can reach out to the specialists at ProTax Accountant. Their team can help you navigate all these complexities with confidence and make sure your business is 100% compliant. All their details are right there on your screen.